Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you 3 examples of morning gap trades from this morning that worked out picture perfect. In fact, it was better than picture perfect. This morning was an absolute gap trading bonanza. Stay tuned. You have to see what happened. You're seeing a sneak peek of one of them on the screen now, but it doesn't even do it justice. We'll get back to the charts in a moment. First, let's discuss exactly what this gap trading strategy is all about. As day traders, we need opportunity. In order to find opportunity, we need to zero in on the stocks that are moving at the opening bell. Those are the ones that are in motion. They create the opportunity. Now, the real opportunity exists for traders that can identify specific price levels where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. Now, that's not the half of it. In my course at LazyGapTrader.com, traders learn all the criteria necessary in order to trade this strategy successfully. What type of stocks does this work the best with? What type of volume do we look for? How much of a gap higher or lower do we look for in the morning? Where do you find these particular stocks? And here's the holy grail, folks. Traders learn how to calculate the specific price levels where these stocks will first be drawn to like a magnet and then have that price reaction from in the other direction. That's where the money is made. Before we move on to the charts, let me just show you the other thing I do, which is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. Here's a copy of today's email. Now, this morning, we had a nice laundry list of gap trading opportunities on the board. It's earnings season, and this happens day in and day out. So in total this morning, there were 8 potential morning gap trade opportunities. Now, not all of these are going to hit the specific price targets that we're interested in. We're only interested to take trades at the specific price level where we determine that it's the highest probability price level on the board. Those are the trades we're willing to take. Out of this list, 3 of the stocks hit their price targets and produced a profit. The first one we'll look at is IQ. You saw a sneak peek of it on the screen. Gap lower, support level is $19.17. We had one number this morning. That was it. It was a do or die on that number. Stop and profit target is about 25 to 45 cents. You'll keep in mind these are minimum profit targets. The second one that hit its price target today was DDD, 3D Systems, gap lower. Support levels are $13.21 and $12.30. Here I give 2 specific price targets, so we have 2 potential trading opportunities. These prices are independent of one another. These can be and often are separate and independent trades on the same day. Stop and profit target is about 20 to 35 cents. This is a minimum profit target. You'll see more about that when we get back to the chart of 3D. The last one that we're going to take a look at that hit its price target today was WLL, gap higher. Resistance levels are 38.57 and 41.49. Stop and profit target is about 30 to 55 cents. We'll take a look at the chart of this one. Keep in mind, minimum profit target. There were 2 other ones that actually went past their price targets, but the way in which they opened was very important, causing our traders that have taken the course at Lazy Gap Trader not to take those trades. Very important that traders take the course and not to try and trade these independent of learning the strategy. So let's run through some of the charts. And we'll pick apart the one of IQ first. Now, take a peek at where the stock closed yesterday. Closing price was $22.16, all the way up here. We opened lower and traded lower. We had one price target on the board today, $19.17. As you can see, the stock came into that price level, and as soon as it went through by just a few pennies, it hit a rocket ride higher, and just minutes later, we find the stock at a high of $20.39. That's some rally in just a matter of minutes. It's $1.22 or 6.3% in just a matter of minutes. You never know when the birthday presents are arriving. It's earnings season, folks, and I call it a gap trading bonanza. Now check out the chart of 3D Systems. So the stock closes all the way up at $16.96 yesterday. The stock is getting absolutely hammered at the opening bell. It opens lower and continues lower. We identify a price level of $13.21. Now, mind you, at the time, this stock is down 20% and we're pinpointing a price level within pennies. The stock spikes through it by just a few cents, immediately reverses higher, finds itself at $14.59 just minutes later. That's $1.38 or 10% in just minutes. Now, why this is important is because in the course, there's an entire video module where traders learn how to turn some of these trades into risk-free, emotionless trades, allowing us to book some profit along the way and then really get paid when we get these runners that go up 5, 6, 10% in a matter of minutes. And it does happen specifically during earnings season. Where else are you going to learn how to pinpoint a price level when a stock's down 20% and feel comfortable getting in the trade? And that brings me to another point, which is the why behind the strategy. Once traders learn the why behind the strategy, they have an entirely different comfort level when taking trades. When you have an understanding of why certain stocks will trade to and trade away from certain price levels, you have a different outlook. It removes the guesswork away from trading. You have a different confidence level when entering trades. You remove guesswork and add back in confidence, and that changes your trading for good. Let's check out Whiting Petroleum. Now, this was a slightly different trade. This was a stock that was gapping higher at the opening bell. So yesterday, the stock closed at $35.28. The stock was getting a lift at the open. We identified a specific price target of $38.57. As you can see, the stock comes into that price level, spikes through it by just a few pennies, and what happened? Just minutes later, we find the stock at a low of $36.32. That represents $2.25 from the entry price, or 5.8% lower in just a matter of minutes on that short trade. A stock gapping higher at the opening bell. We're looking to short the stock at the resistance point where we believe there will be what's called overhead resistance. The stock price will be rejected, trade lower, and that's how we make money shorting a stock when it trades to the downside. Look, folks, this is a strategy that you can use every single day for the remainder of your trading career. If you want to learn everything there is to know about how to trade the gaps successfully, come over to check out the course at Lazy Gap Trader. I'm David Frost. Thanks for tuning in, folks.